Good evening, everyone. Welcome to your market wrap-up for today. We're breaking down key movements in the US dollar, crude oil, and gold markets, giving you the insights you need to stay ahead. Let's dive in. All eyes are on Fed Chair Powell's speech this Friday, which follows the release of the March non-farm payrolls report. Powell is expected to assess how the labor market aligns with the Fed's March projections. While he's likely to sidestep direct comments on tariffs, he may highlight broader economic uncertainty and risks to the Fed's dual mandate. Trade policy uncertainty and market volatility could dampen sentiment indicators, especially with tariffs expected to peak in Q3 2025. A mild tariff impact may keep rates steady in line with the Fed's dot plot, but aggressive tariffs could raise risk recessions. If payrolls meet expectations, Powell will likely maintain his stance on robust labor market and steady monetary policy. WTI crude has slipped below $70 per barrel following President Trump's announcement of a 10% base tariff on all imports, with the EU facing even higher reciprocal tariffs at 34%. While oil and gas remain untaxed, the broader market sentiment has weakened due to global demand concerns. OPEC meets today to discuss production quotas with a planned 138,000 barrels per day increase, potentially being offset by overproduction adjustments. US crude inventories surged by 6.17 million barrels, driven by lower exports and higher imports. Goldman Sachs remains bullish on short-term oil prices, but medium-term risks persist. Adding to the uncertainty, Trump's threat of secondary sanctions on Russian oil could create further supply disruptions. However, with major Russian exports heading to China and India, the broader market impact remains uncertain. Tariff tensions have sparked a sell-off in risk assets and weakened the US dollar, leading to a fresh new high on gold. After hitting a record level, gold is now eyeing $3,200 in the short term, with potential to climb further to $3,300 and even $3,500. Silver, however, is facing resistance at $34, pushing the gold-silver ratio to 93, well above the historical average of 60. Typically, silver outperforms gold in inflation-driven bull markets, but this rally is driven by a different dynamic. Central banks, particularly in emerging markets, continue to increase their gold reserves, signaling concerns over traditional safe haven assets like the US dollar and US treasuries. As a result, gold's outlook remains strong even amid ongoing market volatility. Well, that's your market overview for tonight. Stay tuned for more updates as we continue to monitor key economic events and market movements. Thanks for watching, and we'll see you next time.